5/18/2020, Dow's up 780 points, Nasdaq up 216, Nasdaq 100 up 184. The time is 8 o'clock a.m. Pacific Standard Time, 11 o'clock a.m. Eastern Time. I got the VIX at 29.22, which is down. Remember, I always told everybody on these fear indicators, on the VIX is going to be, the low end is 25, the top would be 35. VXN is going to be 22 to 39 on those fear indicators. On the up days, those fear indicators go down. We're going to talk about Google. Left elbow, the futures were up 660 points in the Dow. They bring, once again, the land of opportunity is when these IRs got down here. On this one over here, it was at 51 as it shows on this left elbow. And the low of the day is 1354 and the high was 1360. But this is where the IRs are still going to be elevated. When the IR closes at 45, it spiked lower down to below 25. But when it closes, and this rule applies to all of the market maker ones that we do. And then, of course, the pop, the bid pop, he comes up, he pulls it in here to the half bar values. Then he runs it up. He's going to pull it back. Let's see what the teeny value is. It's an 89. It's an 88. We know that an 85. We sold half of it into here. We're going to let this Google set up. Each line is $2.20, 22 cents. You went up 14.5, 14 each times 222 in Panther. That's a $32 range off of the bottom. Really, it's 310 off of the high and 29 off of the low. What is good about it is in the market maker division is that every time when the markets are gapping up and we get these left elbow gap downs, this is where the opportunity is. This is where the calls are at their cheapest price. You pop it, it pulls back, you get an ascending, you break above where the gap down was, closing price on Friday. You got bid pops, you got consolidation. You own half of this one still. And we're going to hold it versus the other ones we've done. And the reason is that we're willing to give this a 3 teeny script to see if it's going to break new highs or not. Now, small accounts though. Small accounts. You had a contract, let's say, got left elbow entry, getting up here at the high. Small accounts, cashing that in up here. Bigger accounts, more options, selling, holding, that's a different story. Small accounts have to ring the cash register to get the account profit. So give you an idea. An $800 trade off of that left elbow with the 1350 calls is the right way to go. And holding the other half. Once again, the land of opportunity of the opening bell. How to identify using Panther. Understanding at the lows, 1354. And we hit up here, 1386. That's 3/8 delta is 1386.40 right here in the back end, $1.54 to get back up there. We know that part. So we know that we're holding the other half. But we do know small accounts would be selling the one contract if it was one. Or if they did have two, we could sell one and hold the other one. But once again, it's king exit. It's king daddy on the exit. It's the valuation of the call of making the exit at the high and getting the money in the account. Once again, opening bell. Learn how to trade the left elbow. They stole the 1350 contracts. That was a trade. Then the exit.